This is Robert Kraft, and I'm coming to you live on SNNLive, and we're here at the Sidoti Spring 2016 Emerging Growth Convention in New York City. With me right now is B. Ordonez from OTC Markets Group, Inc. The symbol is OTCM. B, welcome to SNNLive.
Great, thank you so much. I'm really happy to be here.
No, it's great to have you, and thank you for coming on. So, for those who may not know the OTC Markets story, let's get an overview.
All right. I'm sure everyone knows it by now, but it's actually quite an interesting history. So OTC Markets can basically trace its roots all the way back to the 1900s to an entity called National Quotation Bureau. And back then, that entity effectively operated like a printing press and published a big book of OTC securities, a phone book in effect. So our founder and our current CEO, Cromwell Coulson, with a group of value investors back in 1997, bought that infrastructure, and he really had one vision in mind, and that was to turn the OTC markets into something that was both transparent and electronic. So fast forward about 20 years, and that's really what we continue to do. We seek to bring transparency and technology to the over-the-counter markets.
Okay, so it's been a while since we've had someone from OTC on our program, and I did just recently do a podcast interview with Jason Paltrowitz.
Okay.
But I'd still like to get an update. What's been going on in the company? There's so many new regulations, new everything that's been coming out over the last year. But from the company perspective, what's been going on?
I mean, we had a great 2015. 2015 was a phenomenal year for the company, really building on some of the infrastructure that the company has had in place for years. So we had a phenomenal year from a revenue perspective. We recorded record revenue in 2015 of almost $50 million, and that was up 18% over 2014. And that translated to record operating income of almost $17 million, and again, up 31% from the prior year. And a lot of the driver of that growth came from the successful launch of our OTCQB venture market. So back in 2015, we established and launched the venture market, the American venture market, if you like. And it provides a home for emerging growth companies who perhaps aren't ready for a full listing on a national exchange, but want to have access to the capital markets, want to engage with investors, want to provide that disclosure. So that was a phenomenal driver of our growth last year, and we were extraordinarily happy with that. Other things that we achieved last year that we're really proud of, 100% uptime in our core systems. That was really key to us. We operate an SEC-registered ATS, and we're subject to Regulation SCI. And what Regulation SCI mandates is that we operate systems that are resilient and that can withstand sort of crises and so on. So we were very happy with our uptime. We invested a lot in that infrastructure. Some other things that we did over the course of that year, we enhanced some of the standards on our OTCQX best market. So the OTCQX best market, it's really a home for established companies who have a high level of investor engagement. And we enhanced the standards on that market really to raise those financial standards and governance standards to add even more credibility to that listing.
Okay, so a lot's happened over the past year. And just real quick, one last question on the different tier system right now and how it's changed and evolved over the last couple of years. Is what are some of the requirements that for those who don't know, if they're looking at a OT, when you're still on Yahoo Finance, it's other OTC.
Right.
So for our audience that may not necessarily know the difference between QX, QB Venture, what are some of the core differentiating factors?
Sure. So we operate financial markets for about 10,000 securities, both domestic and international. So we run the gamut. On our OTCQX best market, which is our highest tier, we have about 280 international companies. And there's some of the biggest names out there, like Roche, Adidas, and so on. These are companies with market caps of 250 billion, all the way down to sort of the small but established domestic companies who perhaps have a market cap of 100 or 200 million. So we impose high governance standards, an audit committee, for example, independent auditors that need to review, as well as high financial standards, certain financial standards as to market cap and price. Going down to our next tier, which is the venture market. Again, as I said, this is a market that's designed for emerging companies. So the market capitalization probably runs at an average of sort of 10 to 20, somewhere in there perhaps. And those are smaller companies who meet sort of less stringent criteria, but who provide an active level of engagement with their investors, quarterly disclosure. Many of them are SEC reporting companies. And then after that, we have our pink, which is really everything else. And we further stratify those markets really based on the quality and timeliness of disclosure. So really, the overall philosophy, when I said at the outset that what we're looking to do is bring transparency to the market, is to provide disclosure to investors that really allows them to make an informed decision and properly price risk.
Got it. Okay, so another big development over the last, not more than just the last year, of course, but over the last couple of years, has been the advent of Regulation A+. So I wanted to know, how does OTC markets fit into these new regulations coming out?
We're extraordinarily excited. Regulation A+ was really came out of the Jobs Act and a number of sort of changes in the framework around new issuances and so on came out of that Jobs Act, and this was one of them. So in effect, Regulation A+ allows companies to raise money from any investors. You don't have to be an accredited investor, up to 50 million in any 12-month period, and allows them to do it online. And those securities are freely tradable day one. There's an SEC approval process and so on, but it really eased some of the pain points around the old Regulation A. And what it's really going to do, in our view, is democratize the capital raising market. And it's an extraordinary development in that the first Regulation A+ entity raised money just recently, Elio Motors, in February. And it's the first time in the history, really, of capital markets in the US where we've seen a capital raising that was done online. And think of what the internet did for other industries, retail and so on. So we think it's going to be an extraordinarily disruptive, potentially very disruptive change in how we do things and how we raise money within the capital markets. How do we fit into that? We see OTC markets as being the venue of choice for this new generation of crowd-funded securities. We're going to provide the secondary market that gives those investors in these new companies the price transparency, the market, the liquidity that they need, and really allows the companies who are raising that money to prepare themselves potentially for a future listing, to engage with their investors, to again provide that good disclosure, and really to sort of get access to the capital and the allocation of capital that they need to grow for tomorrow.
So where did it happen where someone thought, now, okay, Regulation A+, they need to be listed? Why OTC markets? Why didn't they go to NASDAQ? Why isn't NASDAQ or NYSE marketing to these companies to get these listings on there? Why OTC markets?
I mean, NASDAQ may be marketing and NYSE may also be marketing, but I think for smaller companies, the logical choice is in OTC markets in terms of providing that secondary trading. A NYSE or NASDAQ listing involves a certain level of complexity that many of these companies really won't be able to take on day one, and involves a fairly significant cost, not only in terms of the listing fee, but also in terms of the compliance costs that go along with that. Other research has shown that in terms of small companies with a market cap below 500 million, the dealer market, the OTC market offers, really benefits them much more from a liquidity perspective than the sort of traditional exchange listing market, which operates a central limit order book. So we feel that in many ways, in terms of cost, complexity, providing liquidity to that company, that our dealer market model is much better suited for these smaller companies at this juncture.
So B, what's your background? I understand you're the new CFO into the company, so how did you get into OTC markets?
I am new. I have less than 4 months under my belt. It's been a really exciting time. It's a great group of people, about 100 employees, and it's, as I've said, a really exciting business model. My background before I joined OTC, I was on the sell side of the business, so I worked for a number of broker-dealers over the years. Most recently, I was the COO over at Convergex, which is a trading and technology firm. And prior to that, I was in London. I worked as an accountant for a few years. So I've had a somewhat varied path to get here.
And okay, so we're in 2016. From what you can tell me, what are some of the goals and milestones for OTC going in for to the rest of the year?
Right. So we're going to continue to focus on what we think we do best, which is really to look for opportunity to create organic growth within our business model. Some of the areas where we'll focus, we'll definitely continue to invest in people and infrastructure. That's very important to us. We'll continue to invest in systems reliability. That's key to our model. In terms of the individual business lines, we continue to see opportunity. We're definitely targeting, pushing market data growth in that market data business, and we think we can achieve that through a combination of improving the content, making it more relevant, making it more consumable, and really driving the investor education around the data and what it means. Our corporate services business line, so our markets, we'll continue to find whatever ways we can to add value to those issuers in terms of virtual conferences, research type support. So we're really looking to improve the corporate experience for those clients. And finally, in terms of our trading business, that's going to be a big area of focus for us this year. We're rolling out a lot of really exciting features on that technology platform. We're looking to expand the number of securities that get quoted on that platform, move into NMS-related securities. So we're really excited, and we see a lot of opportunity.
Great. And for our audience, what is the company's website?
Sure, it's OTCmarkets.com.
My name is Robert Kraft, and I'm coming to you live on SNNLive, and we're here at the Sidoti Spring 2016 Emerging Growth Convention in New York City. With me again has been B. Ordonez from OTC Markets Group. The symbol is OTCM. B, thank you so much.
It's a pleasure. Thank you so much.